Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of July 21st, 2025. Let's get started. SEAF signals for this week. We have technology, industrials, and financials. We retain XLK and XLI from the previous week, and we pick up financials, which had a strong trading week and tactical month, rebounding a little bit from its 9 at the strategic quarter. Technology resumes. We talked a little bit about this last week. We weren't sure if this was the beginning of a new trend or just a little bit of a break. Technology's been in the top 10 for the last couple of weeks, actually longer than that. And occasionally we have these little bit of machinations of the asset flows where you can see a little bit of profit taking and a little bit of a pause, but we're right back. Ones across the board for the trading week, tactical month, and strategic quarter for an overall ranking of 3. For those that are new here, that is the strongest, best ranking that we can have. We treat the SEAF model a little bit like golf. Industrial is relatively strong as well with a rank of 10. And again, financials showing some real strength in the trading week and the tactical month with 2s across the board there for an overall ranking of 13. Energy and healthcare down at the bottom. Consensus bottom picks at 33 and 30 for their overall ranking. And let's head into our heat map. So, flows are still remaining relatively on the lower side. I think we're now on 17 straight days with asset flows that are net below 1%. So not a 1% decline or 1% increase in any one given day. Really just incrementally moving along here. It's it shows a little bit of tentativeness. I think we've had, out of the last 50 days, we've only had one day with that 1% move here or there. So that's just, when I see that, it tends to tell me that there's a little bit of apprehension on particular moves. Where there wasn't any apprehension, though, was technology on the trading week, up 0.6. To get the overall ranking of 1 here. Again, for those who are new, 0.4, we did some statistical backtesting. A 0.4 for a trading week shows a little bit of significance. And at 0.6, that's a really strong number for technology. So really also starting to build some accumulation over the 3 time periods with that strong green. Industrial is looking pretty good. And financials at 2s across the board here. Overall, this is a nice board that's starting to kind of level out. Last week, we looked like we were a little bit of in a transition. Things are seemingly a little bit more even now. Greens up toward the top, ignoring financials 9. Reds over here at the bottom here with energy. Healthcare continually struggling with a negative 0.15 or 0.51, showing a little bit of weakness here. And again, we were up 0.26 on the week in terms of net flows. They've been relatively light, so kind of moving into this other chart. This is the sector spider total AUM. So if you add up all 11 sector spiders AUM and turn it into one number, and then you throw a 21-day moving average, this is what you have. Down here below, you have SPY. As you can see here, kind of scrolling in, very slow movements. This was that one day that it kind of accelerated. Outside of that, kind of incrementally driving up this 21-day moving average. What has that done for you, though? This 21-day moving average has done a great job in the recent times to kind of tell you when to be in or out of the market. So if you would have kind of adhered to this trading signal, when the AUM dropped below the 21-day moving average, you would have gotten out. You would have missed a 10% move down. If you would have bought right back in when that AUM got above the 21-day moving average, right now we're at 17.32%. So it's been a pretty good deal. As you can see here, though, incrementally moving up. We're just gonna keep tracking this as it goes up. I think this has been a really good tool as of late to kind of keep yourself on sides overall with your investing, and it also proves out that these AUM numbers mean something. The sector AUMs, how we're watching the flows come in and out of the sector spiders, seemingly have a direct result on the overall market. So we're not it's not correlation but it rhymes. So that's what we're looking at. Heading into our rainbow charts. Energy continues kind of its heart attack trend. We get a little bit of spurts of relative outperformance here as we see money flow in, but that money does not stick. It's very incremental. We did the same thing here. Came up, had a little bit of a relative outperformance trend, and then dropped back down to deep avoid. Energy continues its really downtrend it's been having for, I think, over a year now, and continues to be at the bottom. Not the worst, because that would be healthcare, but near the bottom. Going in with financials. So financials kind of peaked out. We had a little bit of a rundown for financials as we're sitting in this avoid area. As you can see here, after a really long uptrend for financials, we had a little bit of a brief reprieve. We seem to have found some support on a relative performance side of the chart as we have jumped into favored. We'll need to see really some sustained flows. We have a little bit of pickup or accumulation at the tactical month. I would like to see a nice strong inflow day on a trading week to really kind of jolt this thing upward, but we are turned up in the right direction, and again seem to have found a little bit of support here on our relative performance side of the chart. So financials is a good place to be. Technology's run up has been great. We went into favored territory about mid-April, and really just this thing has taken off like a shot. We broke through most of our upward resistance that we've talked about here on the relative performance side of the chart. Really looking strong. We had that brief little interlude in terms of its relative performance turning down, but we're right back to where we were. We're as high favored as we can, and this sustained upper favored is really when we see that nice relative for outperformance trend. So technology, a great place to be, and the top SEAF signal for this week. Industrials looking strong. Now, we're not sitting up in upper favored like we were with technology, but we are seeing some sustained favored. And what is that doing for us? We have a nice little relative outperformance trend. Overall, industrials has been an uptrend going back to January of this year. After a brief break in November and December, and we're continuing that trend. We have a little bit of upward resistance here on the relative performance side of things coming up, but relatively strong flows, consistent across all three time periods, and industrials still looks like a good place to be. Last but actually least, healthcare. Healthcare looked to have bottomed out a little bit, but that continues. I've actually had to adjust the left axis a little bit to get this relative performance to show up on the chart. Healthcare continues its slide. It's a deep avoid. All three time periods at 11, which is the worst score you can have out of the 11 sector spiders. Healthcare just continues to a place. Continues place to avoid. So if you've got healthcare in your portfolio, right now there's still no bottom to be seen, and this is as low as the relative performance has been in the last calendar year. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.